Hi, gang. Sorry I couldn't get the video last week. There's just so much to do and only one of me to do it. And it just got away from me. So here we are today. So today I have a good one for you, and it's called Trap Short Squeezes and Other Complex Setups. And what we're going to talk about is how you can capitalize on situations where not only you learn how to work with the vibrational square out setups, but you're also looking at the volume flows going in the same direction. And folks, that's really where the good points are. So I'm going to show you a few setups. This is not really a long video, but I'm going to ask each and every one of you to smash that like button and subscribe. It'll help the algorithm. And let's get started. Okay, so what we have here is your classic short squeeze. Now, short squeezes are not normal type behaviors. Reason being, not much of a pullback. And I can't say that I'm going to take the credit for teaching you this structure because I learned it from the boys at SMB Capital. Okay? I give credit where credit is due. So here's what's going on here. You have climactic volume at a low. It's obviously turning around. There's a reading here, but we're not going to get into that right now. And what ends up happening is that the people who are short want to get out, and they need to get out at any price. That's what they do. So what ends up happening? If you're short and you want to cover, you've got to buy your position, right? So if it's a normal buying situation, you're going to have a pullback. But since this is not a normal buying situation, there isn't much of a pullback. And that's what makes a setup like this, a consolidation, really tricky, really difficult, because what we're really trained to do is to minimize our risk. And I don't know that you could say minimizing your risk is taking a trade around the 743 level when the low's at 642, because if you're wrong, the stop loss got to be a little over 100 points away, and that's a massive loss. So I'm not advocating that you do this, but what I am advocating is that when you see these consolidations off a low that happen quickly, realize what's really going on. It's likely a short squeeze. That's why it's happening. And the way you know it for a fact, or almost a fact, is how the consolidation doesn't give you the pullback, and it keeps going because these people are still panicking. There is no pullback, and that's the key point. So what ends up happening on this chart, and this is Dow futures, and the reason that this is here is because we have a non-linear pattern. I told you I want to get into some complex situations. Most Fibonacci people and Elliott wave people have never seen something like this, and they don't really know what to do with it. Why is that? Because you have a move up. It's 326 points, and the high is 968. You've got a 244 point drop to 724, but we're interested over here. Now, this is 724. This is 745. This is not the lowest point. It's not lower than here, which makes it nonlinear because the pattern is really paying attention. How do I know? Because what we end up having is a replication flip. We have a situation where the low to the high is 326 points, and from 968 to 745, which is not 724, is 223 points. Now, when you take 223 over 326, you get 68%. And if you've been following my work the past few months, you know that 968 at the high, 68% at the low is a replication flip. And these are the kinds of setups that are almost pure gold. You have a very high probability of success when you see this sort of thing happen. Uh, Price and time is a replication of numbers which fall out in different ways. It could be the price point, it could be the range, it could be the retracement value, whatever. Each time it's a little different. But since you know what to look for, you don't have to look for all kinds of things. We're looking for something specific here. And if we see that the retracement lines up with the exact vibration at the high, that's something that should wake you up. Okay? This is an excellent situation, yet most people would miss it simply because the pullback is not terminating at the actual lowest point. It already happened. Okay, now on this chart, we do have a bull trap. And the bull trap is called out by this big tree volume line right here on the left side, and I drew the line across the screen so you'll know where the line of demarcation is. And I kind of sort of covered this last week. Here we have another rejection zone because you have the high at 33, secondary high at 16. Next two highs are a double high at 12. It can't even get up to 16. It's right at the line, so it's real dicey. But look what's going on under the hood. And I know that these charts may be a little difficult to see. So pay attention to what I'm telling you and pay attention to these notes as well. Because what ends up happening here is that this is a 1-minute chart. The high here is at 29 minutes after the hour. The high here is at 55 after the hour. It's at 26 minutes. The low here is 986 to 012. That's 26 points, meeting 26 minutes, which is a perfect square out. It closes the trap door and it opens the possibility for you to have a nice profit. Okay, this is how you beat the bull trap and get in as the bull trap is closing, that you don't have to chase after it or get in late, because you shouldn't be chasing these at all. Because if you don't catch the bull trap and it gets away from you, you have to wait for the next bounce or forget it. Just watch, learn, and do better next time. Okay, you want to see a classic short squeeze? This is not from today. This is a year ago on an hourly silver chart. Okay? So basically, we got our big tree volume bar here, big selling over here. We draw that line across the page, and this is an hourly chart, by the way. Is it a coincidence that all of this is like lining up with the 200 period moving average? Well, once it pops above, it's like it's going. But what do you need to do in order to get into this on a timely basis without chasing? Well, replication flip again, because you've got this pivot high, 29.76, and the secondary low, while it's 77.5 points with the low at 28.73, this is a 75% retracement after a high of 29.76, and whether there's going to be a short squeeze or not, this is still an excellent replication flip. So getting into the replication flip before the squeeze And the setup's that good that you could feel confident to do this, that you can get in on a timely basis and ride this with the big boys. And that's what we're trying to do. Okay? And look at this high, 3090 on the 89 DG day. And that's just an aside for the pattern. Let's move on to the next one. Let's look at Microsoft. This is actually the recent high in Microsoft. And I know in the Substack, I started telling you about certain highs in the market, which I'm showing you this one. And we're going to, go over Palantir again. And in the Substack, we talked about NVIDIA as well. But we also have the situation with Powell, who's trying to reinflate the market. But the fact of the matter is that Microsoft already peaked several weeks ago. Now, this is your this is your massive gap up. It's like a gap in crap. It goes up, it comes right back down. So these people who bought on that day bought up here, got filled up here, and it was like slowly slipping away from them. So it retests over here, but the real interesting part is over here because the high is 557 and it's 58 hours to here. But not only that, this high is 538. And you want to know what the replication is? There's another replication because this is just a 38% retracement. So it all comes together over here. And this is what the bigger picture looks like. There's something even on a bigger picture here. And you could see all the green volume here on the gap up. And right now, all those people are underwater. But the point is, the April low came in on a 17 DG day. Now, if I were showing you the weekly chart, and if I showed you the weekly chart, you would miss this gap setup, which is more important. The weekly chart has this as a 17 DG low and 17 weeks up. So we got all these other calculations back here, but the first thing you need is the bigger calculation, which is on the larger time frame. So everything's lining up over here. Is this going to recover with the Powell reigniting of the bubble? I don't know. We're going to find out. But the fact of the matter is this whole mechanics of this thing, it already worked. Now the thing is, will it continue to work and go down to the 200-day moving average? Then you'd really catch a score, okay? Now let's talk about a short squeeze on JPM. Now on this chart, I'm not really showing you the entire larger picture, but I am showing you this big tree bar over here, which created this overhead resistance line, okay? At the end of the day, and I'm not going to give it away here, is using the calculation inside the 1 hour, 60-minute cycle manual. We have 34% of a circle in this calculation over here, okay? And that's very important. 34% of a circle. The price action is 13.41 points down, but the real signal is over here. Why? Because it goes through the short squeeze line, comes back, tests it perfectly, and what's the price over here? It's 233. 233 is a replication of your 34% of circle at the prior low, which is why this works. So here's the bigger picture where you could see that the short sellers are exiting in different layers. You've got a big tree over here, layer over here, and then what I just showed you over here. And there's more big tree action happening down over here. So short squeezes happen in layers. What you need to be able to do is have some type of a, and most software packages have some type of how it describes the volume. On mine, I like to use the big tree and grouping because I know what I'm looking for. So it's pretty simple for me. But it's important to be able to line all this stuff up because the truth of the matter is once you get past these obstacles, which are these big tree overhead volume lines, if you're in here, it breaks free because there's no more obstacles. And that's the point. But you want to get into these positions before the obstacles. And the only way you could do that is if you understand the price and time setups and readings to put yourself in a position to win and buy or sell at wholesale and not retail. Okay. So now what we have is it's just a buying situation, really. And what the reason I put this here is because of this consolidation. So for all I know, this could be some type of a short squeeze from earlier, but I'm not going to be too concerned about that. I'm just concerned in showing you how you would play a tight consolidation. Well, first of all, what ended up happening here is we had this trend line forming, and so what we're looking for to see is if the second test touch is going to work. And when we extend the trend line, it comes to here. So what ends up happening is that we have a 277 high, that's the price, and when we do the calculations, what we end up finding out is that this is, well, 72 to 11 is 61. It's actually 561. And on a 15-minute chart, which I'll show you in a minute, it's 61 15-minute bars. Okay. But the bigger picture has the inverse retracement because it's 992 up and it's 992 up from here, 561 from here, and when you do that math, it ends up being the bigger leg is 1.77 times the smaller leg, which turns into a replication flip of the price at 277 at the high. Now, I know for those of you who are watching this the first time, this seems really complicated. I get it. I've been putting this together for 25 years, and it's a lot simpler for me. It's never easy, but if you really want to learn this stuff, there's a lot of free content at beyondthegoldenspiral.com. And there's also plenty of stuff that you could buy, plus our training program. But basically, this is just a really good example of the sort of thing that we teach. This is complex, but it's made simple by virtue of the fact that here's the same action 77, 72, 72.11. We're basically looking at a difference of 61 cents, never mind the $5. That's already a given. So it's 61 cents and 61 15-minute bars here lines up perfectly on the trend line. And it just takes off from there. Okay, now I want to discuss something else with you. This is the last slide. This is something we discussed in the Substack today, and we're looking at Palantir. Now, Palantir, it's one of those AI surveillance stocks, I guess, whatever you want to call it. The bottom line for our work is that this is one of the most popular and important stocks going right now. It's part of the reason the market is back in a bubble again. And I would think that when this thing pops, and it may have already popped, that's what the next week to 10 days is going to show us. If this thing retests to high and rolls over, the market's going to be done. Okay? But that hasn't happened yet. But I will tell you that conditions are ripe. Why? Because this is the complete history of Palantir. From its inception, back in 2020, it's 250. The life of this stock is now 254 weeks. Now that doesn't mean anything until we realize that the low in January of 2023, which came in on the 304 DG vibrational day on my Gann calendar, and the uh, the manual for that on the website is called Missing Link. If you want to learn the Gann calendar, it's the Missing Link manual. From that particular point to the high last week, which was 140 DG day, but it's like almost 3 years. If you take 916 and divide by 360, what ends up happening is that the movement in terms of the Earth's orbit, which gets embedded in all the patterns in the stock market and other financial markets, is 2.54 times a circle, and it just so happens to be the life of the stock itself is 254 weeks. Not only that, the range is 184 points up, and the low here is 584. So we have another replication flip, but this is a rare, very rare calculation. Now, will it hold? That's not for me to decide. For me to decide is to outline the pivots on the chart that are jumping off the page, being very important, and if and when a retest of this high fails, it's probably going to drop a lot, okay? That's all I can tell you. And the other side of this is that I don't expect a heck of a lot the last week of August because it's the lowest volume period of the year. But what I do anticipate is something happening in September. I won't say what, but since September is the graveyard for stocks, what we end up here is whether we're actually going to have the graveyard for stocks seasonality this year, or is the market going to continue to reinflate the way Powell wants it? Because I discussed in the Substack all about how he caved with the interest rates and all that. So I won't recover that here. But I haven't done our standard disclaimer yet. So here's our standard disclaimer, and basically it's telling you that I'm not responsible. This is for educational purposes only, and futures or any other type of trading is not for anyone. Everyone. It could be for everyone or anyone, but not necessarily. Okay? So, bottom line is you go to the website, which is www.beyondthegoldenspiral.com. The 1 hour, 60-minute cycle is the most cutting edge thing I've done in years. We're asking 277 for it. On the website, I put it up at 250, and I don't know how long I'm going to keep that, but it's there now. So if you use the coupon code first order in the shopping cart, you'll get an additional 10% off for the out the door investment at 225. Okay? That's basically it for today. This week should be similar to the time between Christmas and New Year's, although there's a lot of interesting things happening in August, like what just happened the other day in Jackson Hole. But then we have Labor Day in September, so things tend to get real exciting. All right, have a great one, gang. I'll talk to you later.